Welcome to WealthNest, your home for traders, thinkers, and financial freedom builders. Whether you're just starting out or sharpening your edge, you're in the right place. Be sure to subscribe, like, and turn on notifications so you never miss a powerful insight. Just a quick heads up, all content here is for educational purposes only. Nothing shared is financial advice. Always do your own research and manage your risk wisely. You've heard it before, 90% of Forex traders lose money. In Kenya, it's even tougher. That number isn't just a statistic here, it's personal. It's the pressure to turn a few thousand shillings into a fortune overnight. The global stats don't account for our unique hustle culture or the flood of misinformation we face. Today, I'll reveal why most Kenyan Forex traders fail, and how you can break the cycle. We'll cut through the Instagram hype, the fake gurus, and the traps set for new traders. This isn't about blame, it's about understanding the system and the psychology behind our losses. I've been there. Blown accounts, disappointment, and the urge to quit. This is the real talk I wish I'd heard when I started. If you're tired of blowing accounts and struggling to grow your M-Pesa deposit, this video is for you. Let's get into it. In Kenya, hustle is everything. So when Forex promises quick riches, it fits right in. But Forex isn't a side gig. It's a high-skill profession, not a get-rich-quick scheme. The hype creates impatience and misinformation. New traders jump in, chasing signals and quick flips. Our street hustle mentality pushes us to take big risks, but the market rewards patience and discipline. The biggest hurdle? Shifting from hustle mode to a learner's mindset. If you treat Forex like a hustle, you'll lose like a gambler. The market isn't impressed by hustle. It demands skill. Most traders guess their way through the charts, buying on green candles, panicking on red. That's not trading, it's gambling. A trading plan is your rule book: what to trade, when, and how to enter and exit. Without clear rules, you're just hoping for luck. The market will drain your account if you rely on gut feelings. Write your plan, stick to it, and trade with intention. Overtrading and FOMO. Every trader's nightmare. Lose a trade, you chase losses. See a big move, you jump in late. This is emotional trading, not strategic trading. FOMO makes you believe opportunities are rare, but in Forex, there's always another trade. Patience is your edge. Wait for your setup. Don't let emotions dictate your trades. Missed a move? Another is coming, just like Matatus in Nairobi. Scene transitions. Chasing big wins with huge risks is common here. Professional traders risk 1 to 2% per trade, never more. Risking half your account, 2 losses, and you're out. Small, consistent risk keeps you in the game long enough to learn and win. Longevity beats luck every time. Protect your capital, it's your only tool. Signal groups feel like shortcuts, but copying trades teaches you nothing. You don't know why you're in a trade or when to exit. Relying on others creates dependency and leaves you lost when they disappear. True trading freedom comes from building your own skills. Don't just copy, learn to fish for yourself. Master your own decision-making. Trading is 80% psychology, 20% strategy. Fear, greed, and anger destroy accounts faster than any bad trade. Emotional control is the real holy grail. Recognize your feelings, step away when needed, and follow your rules. Most traders ignore this and keep searching for magic strategies. Master your mind, and you master the market. Stop collecting strategies. Pick one and go deep. Learn its strengths, weaknesses, and when to use it. Backtest, demo, and specialize until you know it inside out. Be a sniper, not a scattergun. Consistency comes from mastery, not variety. Focus leads to confidence and results. Treat Forex like a business, not a hobby. Write a plan. Your goals, strategy, risk rules, and schedule. Let your plan guide every decision. Remove emotion from the process. Print it, read it daily, and stick to it. This document is your roadmap to long-term success. Businesses thrive on structure, so should your trading. Pros focus on risk, not just profit. Always know your stop loss before your take profit. Managing risk frees you from fear and keeps you in the game. Protect your capital at all costs. Risk management is survival. Most traders never review their trades, they repeat mistakes. A trading journal is your feedback loop. Record every trade, why you took it, how you felt, and the outcome. Review weekly to spot patterns and improve. Journaling turns experience into wisdom. Learn from your own data, not just others. Trading is lonely. Find a serious community, not hype groups. Share analysis, hold each other accountable, and discuss struggles. Respect the process. Mastery takes time, not shortcuts. You wouldn't expect to be a doctor after a few videos. Same with trading. Embrace the journey and give yourself time to grow. Consistency is a marathon, not a sprint. If you're trading Forex in Kenya, you're already ahead. Most won't even try. But remember, Forex isn't a lottery, it's a skill. Treat it seriously, build a plan, manage risk, and master your psychology. Success comes from small, smart decisions every day. Discipline beats hype. If this helped you, like and subscribe for more real talk and tips for Kenyan traders. Let's build a community of skilled, consistent traders. Change the narrative. Make Forex about skill, not gambling. Commit to your growth. Comment below. I'm ready to beat the 90% if you're serious. Let's do this. Thanks for watching today's video on WealthNest. I truly hope you found value in it. So what was your biggest takeaway? Let me know in the comments. If this helped you, just smash that like button, subscribe, and tap the notification bell so you never miss the next trading insight, tool, or tip. We're building a focused trading community, one smart decision at a time. WealthNest, build, trade, grow.